Out that the spreads in Pakistan are higher than the regional or global sectors, and I think that's an attractive thing. But let's not forget that the kind of NPLs that we have in this in this country, 16.5%, with some people estimating that number is only climbing up because of all the fiscal challenges that we have, going up to 20%. I'll be very honest with you, and again, it's a tough pill to swallow sitting in. But if you look at corporate banking, if you have 20% of a portfolio not performing and 80% performing at best 2%, do the math. You guys just do the math. It's a loss leader in some cases. Do the math. I mean, as was said by my colleagues, it's the other part of the business that is the one that's allowing them to do things that they're doing. But so the spreads, and not all banks are enjoying that spread. The average spread is that. I mean, I'm a very small bank compared to the bigger banks here. I wish I had that. I'm envious, but I don't have that. But I think one has to take into account the fact that they all are faced with pretty high NPLs. And this is one of those few cases, as was said earlier, that the banks have come to the bailout of the government rather than the government coming to the bailout of the banks. So I think this is something, let's not forget that point also.
I think one point which people should, most of them are chartered accountants here, the average return on asset for the banking sector is about 1% industry-wise. And the return on equity for the entire banking sector, my estimation for this year is maybe it's about 13, 14, maximum 15%, the whole average. Out of about 35 banks, there are at least 10 or 12 or maybe more who are either making losses or making very marginal returns. So, I mean, some of the big banks, obviously, they've been there for the last 60 years with very large capital. So, in terms of, when it comes in the newspaper that MCB has made several billions of rupees, I think what you really need to see is that what is the return on equity? Return on equity in Pakistan banking sector, commensurate to the risk which people are taking, is not high. So as a result, I think that criticism is not valid, that banks are making undue profit.
We have time for two quick questions. One here, and make sure the next one's identified, sir.
I would like to spare Shehzad and ask
I was going to say,
question to the panel.
Answer the next question.
And generally to the banking industry as such. And if you're talking from the perspective of the people sitting in this room as individuals, not as CFOs of their corporations, the return on the deposit that an average investor can get from the banking sector is maybe 6, 7, 8%. Whereas if that money is put into a government securities fund, then they can get a return of 11, 12%. I'm wondering what the banking industry is doing itself to equip and to face this challenge where the money starts flowing from the banking side to the government securities fund in the market, where the return profile is much better, and the risk profile, considering that the banks are also becoming a major lender to the government only, the risk profile is also a lot better, especially if those asset management companies are backed by the same parent banks. Thank you.
Thank you. Amir.
I think what you're saying is true, but even today, you can get a spectrum of rates from, say, 5% all the way to 12%. Why do people not take the money out from one bank and transfer it to the next bank? Banking is a matter of trust. If your customer trusts you, he places the money with you. And by and large, banking has always been a matter of trust. I mean, if you feel that you're getting a better rate, I bet 95% of the people in this room will not shift their account for 1% better rate. And yes, as a treasurer or as a CFO of a company, you may switch deposits, but as an individual, it's generally does not happen. It's a relationship built on trust, whether you trust your bank or not. So that's the answer.
Coming to the individual side, let's be honest. Quite a few of us can get, even from the two big banks, the most profitable banks, whatever you want to call us, easily double-digit rates by placing money in term. It's not difficult. All it takes is a call to your relationship manager and it gets done. I think what has happened in the market, it's easy to say that the banks are not doing it. Yes, we are not doing it probably in an active manner as we could be doing, but that is for obvious economic reasons. But to say that these options are not available with a big or small bank, may not be entirely true, and I'll leave it at that. But corporates which place money with us, it's a very simple thing. The CFO would probably have a treasurer working for him who calls Habib Bank, United Bank, and my bank for a rate, and even if we are off by 5 basis points, the rate, the billion rupee deposit or 300 million rupee deposit will go to the bank, no questions asked, that you are out of the market today. Same for FX.
We have one last question, sir. Please make it very, very clear.
My name is Imran Khalil. I'm representing Float Securities. My question to your panel is this time for the depositors to worry, because all they're doing is taking money from the people and giving it to the government. And as Dr. Saab said, the government borrowing is going up and up. So is it time for the depositors to worry, and can we see a run on the banks?
That's a question related to systemic risk. Okay, we pretty much faced a situation like that in the last quarter of 2008, and central bank took quick steps, albeit with a delay, to resolve the situation. Systemic risk is something you would not wish on your worst competitor or on your neighboring countries. It leads to a situation whereby things actually spiral out of control. No matter how liquid we are today, nobody is geared by default to cope with systemic risk. But when you build an argument to systemic risk, there is a missing link, I think. What you're assuming is just because we are giving money to the government per se, there could be a systemic risk situation. Here I would like to take a minute to give credit to our central bank. Okay, it is one institution that has done its damnedest in this weak macroeconomic situation, which has now festered on for a while, probably the longest bout of stagflation we have seen in the history of this country. They have managed to maintain the health of the financial system in no uncertain terms. Yes, at this stage, there is a bit of a contradiction in their stance on the monetary policy, but that is more politically driven by the requirements of the current governance at the federal level. Ministry of Finance and State Bank may not be the best of friends, but to me, building that argument of lending to government leading to systemic risk anytime soon is a bit far-fetched. As a banker, it scares me that such tenuous linkages are made. In my personal humble opinion, we are nowhere near that kind of situation as we speak today.
Now, I know I said the last question, but I've got a man desperately trying to ask it. So please.
Yes. Hello, my name is Arif. I'm from Faisal Bank. Well, I think we've had a pretty constructive discussion so far in terms of the banking scenario.
We're about to close it up.
Yes. So. Obviously, it's quite evident that the banks, the top 5, in fact, most have followed a simple CASA T-bill strategy, which means you acquire accounts across the branch network, the economy grows, black economy gets documented, and the money goes into government securities. We all know that, it's quite obvious. My question to the panel here is that what do you see as the future for the banking sector in terms of the asset side? Where would you want to deploy your funds? Clearly, you've built up reserves this year so that you can take credit losses or other things in the years to come. And obviously, you'll manage your dividends, your payout strategies, your rights issues, your expansion plans, via this very good year for you, as the government, of course, builds up a big deficit. In any case, as private sector banks, where do you plan to invest in the next 5 years? Which economic sector in Pakistan? What are your solutions for the energy sector? What are your solutions for the SME sector? What are your solutions to make sure that the credit crunch, the consumer asset crisis that came out 2008 to 2012 does not come back? Those are the key questions that I would like you to sort of dwell on. Thank you so much.
You might have to wait for some of those because we could start a whole new session. Yeah. All very valid points. Thank you so much. I'm going to let our entire panel wrap up answering maybe a little bit. You'll get an answer from everybody.
There are plenty of questions there, but we think food.
Pick which one you want.
Food is something that we are very bullish on as a sector. We would be bullish on energy also. If the circular debt issue could be resolved. I agree with the gentleman that there is a great investment deficit in these areas.
Yes, I think agriculture sector is something that we are pushing very hard. And apart from that, I think there's still a lot of scope in consumer finance as well as retail banking, which is yet to be explored. And we are pushing hard on that sector.
I mean, on the sectors, I think they've named the sectors. I think, again, it's all about embedding yourself with the client and becoming their trusted partner and trying to become end-to-end solution provider to them.